Microsoft reported its Q3 FY25 earnings just the other day, late in the day on April 30th. And there were some things said during the earnings call that I'm going to cover, especially two key things, one by Amy Hood, the other one by Satya. They beat expectations in certain areas. They came in line with expectations. They had a strong quarter, especially in Azure growth. So I'm going to jump into the numbers. I'm going to talk about what this means for customers and how you need to think about when you approach Microsoft, whether it's an in-term or very specific product edition negotiation or just the bigger picture of a holistic Microsoft negotiation, even if it's before or coming up to the point of a renewal. So overall revenue, $70.1 billion, up 13%. Analysts were expecting like 68.4 billion. So that's a beat there. Commercial RPO, remaining performance obligation, the dollars that are in the outer years of your contract, 315 billion, up 34%. That's a massively important number. Whether it's Microsoft or others, it's the idea they're telling the investment community, look, our upfront revenue may not be growing as we want because of economic uncertainties, the point in time, new election, all of it. But don't worry, we're a SaaS-based company. We sell products with term commitments that you can't get out of. And if you look at that RPO number, look how big it is. Look at the growth number on it. We're going to continue to do that so you investors don't have to worry because there's actually more money coming. Microsoft Cloud revenue, think Microsoft 365, LinkedIn, Dynamics, Azure, all of it, 42.4 billion, up 20%. That number was actually ahead of what they were expecting. The margin on that is 69%. I've talked about this a lot. I would keep that number with you, especially if you're a company in industry with tight or slim margins. Always remind them when they hit you with a price increase on even a product you may not be getting full value from. Say, hey, that's great. You guys have a 69% margin. Ours is much lower than that, single digits, and this is what you want to do to me? That doesn't work. Microsoft 365 cloud commercial revenue, right? Not consumer, but commercial. Revenue went up 12%. It was 7% growth last Q3. Saw some of the components of that. Seat growth was up 7%. They have 430 million seats now sitting on Microsoft 365. They don't break it out by the types, right? Is it F3? Is it E1? Is it E3? Is it E5? They don't break that out, but that's pretty massive number. The ARPU, average revenue per user, which is obviously very important in the cloud software as a service space. There's growth there. They didn't give you the percentage, but they did say it's tied to E5 and Microsoft 365 Copilot, which is no surprise. That's an important thing. They obviously know, and they tell the market, we got 430 million seats. The revenue per user, per seat, is going up. They love that. Because if there's not a lot more seats to go get, as companies may not be growing their base, if we can increase the spend per seat, that's awesome. And the way to do that, upgrade them to E5, attach and add Microsoft 365 Copilot at $30 per user per month list. LinkedIn, don't want to forget about LinkedIn. Growth was 7%. Last Q3 was 10%, ahead of expectations. LinkedIn, for me, I spend a lot of time on this. Like when I have conversations, I want customers to think about LinkedIn as Microsoft. I get different business units. I understand that their renewals may be at different times. I understand that you may need more LinkedIn before you can talk to your EA, but I highly recommend gathering internally to understand all the components LinkedIn, laptops, devices, EA, Microsoft 365, SCE, the SQL on-premise, the Azure component, the unified support component. Think about all of it. Get your house in order as a prep for your upcoming negotiations on any piece to it, okay? It's very important because you actually can achieve better deals if you do it appropriately. D365, that's their business apps. It's a highly competitive space. SAP, Oracle, Workday, Salesforce, others. The revenue there is up 16%. It's in line with expectations. Obviously, if you're considering a D365 product, they're going to come with you and say, hey, if you really want to enhance and add the value, add Copilot for sales as an example. That's going to be very important. Think of it, they're going to try to tether the two together. But either way, if you're willing to give and take away potential market share or pull away from an incumbent, SAP, Oracle, Salesforce, high amount of leverage there, you all know that. Azure, I mentioned it, 33% growth. The analyst community was thinking around 30%, so that's a beat. On top of this, not only was that impressive growth, they did call out that 16 points of that's tied to AI services. Now, they were very vague, and they will be for a while, but that's noteworthy. And then enterprise and partner services, think unified support, revenue was up 5%. Interesting, last Q3, it was down 9%. This is an area where customers that we're working with are considering a move off of unified support. If you do that well, you could end up actually more value from unified support at a lower cost. And perhaps maybe it does make sense to move off. But I would just tell you and implore you, you got to give yourself enough time. And it's got to be a real process with an end state that can happen before your renewal date. Now, I mentioned quotes. Let's talk Amy Hood first. She said that strong demand for our cloud and AI offerings is there. Revenue from our AI business is above expectations. The reason I'm calling this out, obviously they're going to hone in on cloud and AI. But I think it's the general way without specificity that they're reporting things, right? And that's okay, and I expect that. But they need to be able to get to a place where they can say, Microsoft 365 Copilot revenue is this, and it's grown like this. Dragon Copilot, Security Copilot, they want to break it all out. GitHub, Copilot Studio. They want to be able to get to that place, and they're clearly not there yet. Okay? They want to continue to be able to say above expectations, exceeding expectations when it comes to AI. They want to be able to say AI services was a bigger number of points of the total Azure number. So all customers out there, remember this, the dollars will matter, but you're at a point where anytime you dip in and add, they can tell you there's growth there because they don't need to give the numbers. But they don't have to give the specificities. So even if you're doing something small, air quotes, there's high value in that. So make sure you tell them that you know that, okay? It's not necessarily the dollars, but it's a win for them. Which brings me to my next point. The most important quote of the day was from Satya. He said our overall deal size continued to grow. And in this quarter, Q3, we saw a record number of Microsoft 365 Copilot customers returning to buy more seats. And that's the game. I've been talking about this a while. They need to get you to start tasting it. They need you, even if it's small. But what they're telling the market is don't worry about it. Don't worry about us starting small. We told you we thought we could get thousands of Copilot licenses out of the gate. We haven't been able to do that. But don't worry about it. We start small and they grow. They grow in turn. We don't need to wait till the next renewal date. So all customers out there understand that a small commitment is very important to them. So that when they tell you have to do 500,000 seats, push back on that. Push back on the pricing. I still need discounting because I understand what's going to happen here. And you know it as well. I hear what your CEO is saying. I need better pricing, better discounting. I need volume discount structures. I need investment dollars. I need to get ahead of where you're already planning, which is beneficial to you, not me. If you want to be a partner and you want me to adopt Microsoft 365 Copilot.